Okay, friends, we are live again. Welcome to our live chat. Whether you're watching this live or catching it on replay later, I'm so glad you are here. I am Alphin, your local realtor here in Reno and Sparks. I'm with JMG Real Estate, the Reyes team. And today I have Jessica. I know you've probably seen her on previous live. Jessica's with Guild Mortgage. So I would like to give the floor to her, tell her about herself for anyone who does not know her yet. So go ahead, Jessica.
Thank you, Alphin. Thanks for having me again. Again, I'm Jess. I'm a loan officer here with Guild Mortgage. I've been in the financing mortgage industry for 5 years now. I'm actually getting really close to that 6th year in September.
Woo!
Yeah, I started back in 2020-ish when things were really crazy. So I don't really know what a normal market looks like. So I'm probably the perfect person to ask about all this craziness that's going on with rates, home prices. I mean, you name it.
I love it. So today we are going to be diving into four most asked questions buyers are asking this summer. And trust me, we've had a lot of people have that hesitation about buying, and these questions are definitely going to clear them up. Okay, so first topic: what is rate buy down, and is it worth it?
That's a really good question. That's actually something that every lender is going to bring up, whether you're at the pre approval stage or you're already in contract on a home. So let's get to it. A rate buy down is actually very common. So usually there is a starting rate depending on rates are based off of the loan. First of all, the loan program that you qualify
Mhm.
for. Second of all, your credit score. So the better your credit score, the higher your credit score is, the better interest rates are going to be offered to you, right? Because you're less of a risky buyer. So
Mhm.
the way it works is you're going to have your starting rate. Let's just say that's 7% right now, right? But then typically depending on the loan program you're looking at and depending on whether you're using down payment assistance or not, you will have the option to get a lower interest rate. So that's where the buy down aspect comes in. So if your starting rate at a 700 credit score is 7%,
Mhm.
and you want let's say a lower mortgage payment, you want maybe you're like $300 shy from your goal, right? And that means that in order to get those $300 reduced from your current mortgage payment at that 7% interest rate, you maybe have to be at a 6.5% interest
Mhm.
rate. That's going to cost you a little extra, and that'll be reflected on your closing costs. So you're pretty much paying the bank more to be able to get access to that lower interest rate. Usually, most people opt to do a buy down just to be able to get that mortgage payment a little more within their means.
I love that. So, and sometimes seller can definitely cover it, right?
That's right. So we see a lot of seller credits, especially in a buyer's market like we are in right now, thankfully. And if the seller of the property you made an offer on is willing to cover a portion of your closing cost and you have money for your own closing cost, we could instead use that money that they're actually gifting you or crediting you towards the buy down. That way, it's almost like you're getting a free rate because you're not paying the extra amount to get that lower interest rate.
Did you guys hear that? So there are options. So instead of like a price drop, we might negotiate a rate buy down instead. So I hope you guys are hearing this. These are really great nuggets to kind of, tune in and understand because, just what Jess said, if you're comfortable with a 1500 and let's say, we're at 1700, 1800, we can look into a rate buy down so that we can get into that comfortability stage. So I love that. So if you're house hunting, just don't look at the price, look at the monthly payment strategies too, you
Yep,
know, and that's where we can help with that, especially Jess. She can crunch numbers, look at how that's gonna look for you.
that's right.
So second topic, I was like, second topic. How long does a loan process last
It's a
or
great
take?
question. For most loan programs, the process is 30 to 45 days. 30 days is a sweet spot. Honestly, it's very rare for a loan to take a full 45 days unless the one loan I do see that can sometimes take a little longer is VA. And that's because the VA is involved. So anyone who is a veteran knows that the VA likes to drag their feet a lot. So, those loans that include those third parties that have to approve and look into stuff for you before giving us the good to go, those can take a little longer. But honestly, I've even been closing VA loans lately at no more than 30 days, sometimes even sooner.
Awesome. And also, Jess, could you break down the typical timeline, like from pre-approval to close?
Of course. So the pre approval part itself can be really quick. So, what I tell all my clients is look, I'm going to get your application. The moment I get your application, ball is in your court.
Mhm.
As soon as you get me your documents, whatever it is that we require, typically the basic documents we ask for is the last 2 years of W 2s, your most recent month of pay stubs, and 2 months of bank statements to verify your assets. If you're going to be using assets from like a 401k or something of that sort, then we may ask for a statement. But those are usually just the basic documents we ask for. If you get those to me within the same 24 hours that I took your application, I'll probably be able to have you pre-approved end of day, if not beginning of next day. It just depends on how quick you can get those documents to me. So getting pre-approved is really quick as long as you can get those documents to me. Once you're pre approved, it really depends how serious you are about finding and buying a home. Sometimes people don't have that urgency of, I must find something right now. So they may wait a little longer just to wait for that perfect home to fall in their lap or be live or available for sale. Other people must move really quickly. So, I mean, Alfin, you're the realtor. How long does it usually take for someone who's extremely motivated to find a home?
Find really motivated within like less than a month, because it's
Yeah.
really, or a week. It really just depends. You can fall in love, get it going, find a home within a week, or like my
Mhm.
recent buyer, a year. So, it just depends. Like I've worked with
Yeah.
someone for about a year, some within 3 months. But if you're really motivated and we, for some reasons, saw a house within a week, and then there you go, we start the
Mhm.
process. So it really just depends. I've
Yeah,
my one of our recent clients, like what, a week's time is honing on to a home,
exactly.
so it really depends.
Yeah. And in those unique cases where the person has already found the perfect home and just needs to get pre approved ASAP so they can make an offer on it, it could take even less. And those do
Mhm.
happen often, which is why we usually recommend you just get pre approved first. So you're not in that kind of pickle where it's like, I have to rush and get pre approved like tomorrow so I can make an offer and not have someone else beat me on it. Right.
Yeah. And this is why, having the right team definitely matters. Like, if I'm helping you find a home and Jessica's working on your loan, we're in sync to definitely avoid some delays. So, just to kind of pivot really quick, we have two people on live. Jamie is asking, hey, my credit score is below 600. I'm trying to raise it. Need some tips, please. So, could you provide maybe two quick tips, if anything? Jess can definitely get with you and answer it more in detail. So, Jess, do you have like maybe two quick tips?
Of course. When it comes to credit improvement, it is very much so personalized. So I'm just going to give you some very basic tips that may or may not apply to you. But if you actually want to get to the nitty gritty of what it is that you need to do, just ring me and I'll help you, no cost at all. So, what I usually recommend is credit card debt. That is usually one of the main reasons why credit scores may be stumped or stuck at that same rate and it won't go up is because your credit card debt is high or you keep utilizing your credit cards instead of paying them down. So, usually, the rule of thumb is if you have credit card debt, what you want to do is you want to keep the credit card balance at least 30% or less of that credit limit. That's when you will see the most bang for your buck, literally, from your credit usage. Another thing that usually kills people and really ruins the fact of like the ability to get their credit score up is 30-day lates. If you
Mm.
have been giving or you're still paying your credit cards, but you are past 30 days of when that payment is due, that appears on your credit report and it dings your credit every single time or every single month you are late. So don't be late, but if you will be, make it less than 29 days, please. Otherwise, that's going to make it into the credit report and that'll keep your credit score from improving. It'll actually bring it down.
Oh, so yes, those are really great tips. And just like Jess said, they are personalized. So, Jamie, let her know and she can definitely look at what you got and help you and assist you there. Another one, Andrea. Andrea said she's been meaning to get back with you regarding bank statement loans. She said that if you can touch base on that, maybe we'll have a little bit because we do have two more topics to go. So, Jess, do you have maybe what do you have for bank statement loans, really quick for Andrea? But I know you two will have your one-on-one. But just for
Yes.
everyone else listening,
Mhm.
for this is for entrepreneurs. Jess, what do you have for bank statement loans?
So, bank statement and profit and loss loans are kind of a very similar kind of type of loan. These are amazing for business owners who may not be able to claim a whole lot of income on their tax returns. Maybe you are claiming a good chunk, but you're also writing off majority of it.
Mm-hmm.
And between you and I and everyone else who's watching right now, we do, as a loan officer, we do have to go based off of the net income, not the total you made, because technically you're writing it off and you're claiming to the IRS that you already spent that on your business or something else, right? So it's not free and clear income. So in that kind of situation, we can consider a bank statement loan. The bank statement loan, the way it works is it'll analyze your entire bank statement deposits from your business and you allow us to utilize a good chunk of that. So as opposed to a tax return where you're writing it off and there is no choice, we have to go based off of that net income that you have left over. The bank statement is going to focus only on the income that's incoming. So you want to make sure that you are keeping your bank accounts for your business very organized and that all, if not most, of your transactions for your business are happening within one bank account that is specifically for your business. I do see this a lot where people use their personal and
Mm,
business interchangeably.
yeah.
That can cause some issues, although I have some banks that have a workaround that sometimes. Another thing to keep in mind is you do have to have at least a 680 credit score or better. So if you're not quite there, again, I can offer that credit improvement plan to help you get there. And then one other thing is since these are creative financing loans, they're not your standard regular schmegular primary residence government loans. They do tend to require a little more down payment. So I think last time I looked at a bank statement loan for a client, it was between 15 and 20% down that they have to put.
Absolutely. And I hope we're not confusing a lot of people because I know we have some first time home buyers tuning in, and then we also have entrepreneurs tuning in. So, what she just talked about are for entrepreneurs, creative loan financing options. The credit limit or what they look at is different for that as well. So just that portion that's for the entrepreneurs.
Yes.
So we'll circle back, Andrea, and for any other entrepreneur friends out there that's going to be watching this live, definitely get a one-on-one with Jess. That way she can definitely dial you in and give you the most information regarding creative financing. But going back to topic number three, our topic number three is can I use gift funds from family?
You
So
sure
now,
can.
yeah, there you go. This is a big one, especially for first time home buyers. People are always asking, can my mom or dad help with down payment? Jessica, carry it. Go ahead.
Yes. So, matter of fact, most government loan programs are only going to allow you to get a gift if it is a family member. Now, a credit from your employer isn't necessarily considered a gift, so that's a little different. But if we're talking about maybe a friend wanting to give you money, that's where it can get a little gray. It does have to be a family member for the most part. Depending on the loan program, conventional doesn't really clarify what they consider a family member. FHA is very black and white. They list out exactly what kind of people they consider family members.
Awesome. I love that so much. So if your parents or grandparents want to help, we can absolutely make that part of your buying plan. Um,
Yes.
awesome. So that's for gifts. Topic number 4. How much home can I actually afford? So let's talk real numbers. This one gets people stuck for the most part. How much home can I actually afford, especially with everything getting more expensive? How do you go about walking through a client with that?
So that's a really easy question to ask because we have systems, right? And these systems indicate that it's all based off of your debt to income ratio. That's ultimately what's going to pretty much tell you how much we can qualify you for.
Mm-hmm.
So that's going to be an analysis of your total monthly income versus your total monthly debts. Emphasis on monthly debts. A lot of people are really worried about the overall balance of their debts. If you have $100,000 in debts, but your monthly payment is only $500, that's all that matters is what you're paying on a monthly basis.
Mm-hmm.
So your DTI is going to be pretty much a calculation of monthly debts plus future mortgage payment for that home that you will be getting. That's your total debts divided by your monthly income. FHA is the most popular loan program out there for a reason, and that's because they are the most lenient when it comes
Mm-hmm.
down to how much of a debt to income ratio you can have to qualify. You can qualify with a little more, utilizing more than half of your income towards debts. So that's 56%. And with conventional, the reason why people don't always qualify for conventional or don't qualify for as much on conventional as they do with FHA is because the DTI limit on that one is 50%. So, really, what determines your power to buy is going to be those numbers. So, let's say we can't get you to the right number or the number you want to be at. Maybe you found a home and it's 400,000 and right now your DTI is only allowing you to qualify for 350. Then we could target debt in order to, when we bring down your debt, that means we are bringing down your debt to income and now you can qualify for more. The other solution would be bringing on a cosigner who brings in income of their own so we
Mm.
can bring up that DTI for you.
Okay, so, and then Jamie's asking what is DTI? So debt to income.
Yes. So DTI is debt to income. Again, that's just an analysis of your total monthly income. We do go based off of gross if you are a W-2 employee. So we don't look at it after deductions or taxes are taken out. We do go off of the larger number. So it's an analysis of your monthly income versus your total monthly debts. That would be whatever appears on your tax return, right? Not
Mm.
your tax return, your credit report. So that would be credit cards, car loans, personal loans, that kind of stuff. Plus, if you have like a repayment plan with the IRS or child support that you're paying on a monthly basis.
There you go. All right. So it's not just about how much the bank says you can spend, it's how much you can comfortably spend and still live your life, right?
That's right.
So I know it's a lot of information to kind of like soak in, right? There's a lot to it, especially if you're a first time home buyer, if you're an entrepreneur and stuff like that. So, what we're offering for anyone that's interested is our first time home buying webinar. And we already picked a date for next month. Let me look over here. It's going to be August 23.
23. Yeah.
So it's going to be August 23. Put in your calendars. We'll have the registration link. It's free for anybody that's wanting to start the process as far as the journey of home ownership. It's definitely never too early or too late to try or to see where you stand. So we'll have that link available. Our next first time home buying webinar, again, is going to be August 23rd, 11 to 12 p.m. Totally free. Invite your friends, family, whoever you think that would benefit from the information that we're going to share.
And it's
It's,
super laid back, guys.
yeah.
I mean, last webinar we had someone was working, I think, and they were just listening in. And from time to time, they would have questions, they would ask questions. So it's not something that you have to be, sitting down at home
Mhm.
rigorously and like really intent listening. You could do this while you're taking a walk. Really, as long as you are there listening and asking questions, we are more than happy to have you there.
Absolutely. And I know sometimes it takes more than one time to really understand a few things. So if you want to just keep coming and tuning in, asking us the questions, feel free to do that. This is for you. We want to just teach and educate. So, yeah, so we'll be doing the monthly webinars as well. So if you find this helpful, definitely give us a thumbs up or share it with a friend who's thinking about buying. This definitely will help as you go down the journey of home ownership, and it could definitely literally change your life.
Yes.
Yeah,
Huge.
I can go on with my personal story with my family and how we bought our first home and stuff like that, but it's life changing. You build some generational wealth for your family. So if you want that to be you and you want to learn how, go to our webinar, and it's going to be next month, August 23, 11 to 12 p.m. So other than that, Jess, how can people get a hold of you?
You can call me, text me, email me, DM me, mail me, smoke signal me.
You would
However
just
you
see
need to
Jess.
get a hold. Yes,
I'm
I'll
like,
be there.
oh,
Well,
like
you
that
can
way.
always call me. That's probably the easiest way to get a hold of me. My office line is 775-229-4175. Or you can also text that number, matter of fact. So I know some people are better over text than calls. So if
Mm-hmm.
you're too busy to make a call, just shoot me a text and we'll arrange a time to get together. Or you can email me. Are you guys ready? It's kind of long. So it's Jessica dot F as in Frank dot Garcia, Garcia, at guildmortgage.net.
There you go. And Jess, if you could also put it in the comments, that'd be amazing. Other than that, next webinar, August 23rd, 11 to 12 p.m. Free to register. I'll put in the registration link as soon as we get the event up. Thanks for hanging out with us.